what's in store for 2024. Hey everyone, Nick Nielsen, Certified Financial Planner. Let's talk about 2023 for a minute. If you made your investment decisions based upon investment outlooks, based upon economic forecasts, 2023 was probably a really frustrating year for you. After all, everybody was talking about the recession. Everybody was talking about how the stock market returns for the year were surely to be negative. Everybody was talking about cash alternatives, the focus on I-bonds, treasury bills, CDs. Well, while the world was talking about these ideas to earn 4, 5, or maybe 6%, as I record this video, the S&P 500, which is a great proxy for large, well-capitalized US-based companies, really close to yet another all-time high. I can't help but think about how families acting upon a written, documented financial plan could have been saved from some of these doomsday Armageddon-esque scenarios that were oh so prevalent this year. I wanted to share with you a story about my own life and I think how it pertains to financial planning. I'm a huge basketball fan. During my freshman year of high school, we had an amazing basketball coach, a longtime coach, Gene Miller. He was is one of the greatest high school coaches in the state of Indiana. He's won multiple state championships, hundreds of games. All of the accolades have been bestowed upon him. Hall of Famer, one of the great coaches in the entire country. His conditioning was what he was known for. It was grueling. Some people thought it was even torturous to go through it. As a young 15-year-old entering high school who was admittedly a tad chubby and have never really faced adversity, this was shocking to the system. I was not mentally or physically prepared for what I was to endure. However, I came to love it. I knew going in he was a great coach, but I really didn't know what to expect until I went through it. Interestingly enough, Coach Miller, his goal was all about preparedness. It was about conditioning. It was about having grit so that no matter what happened in a game, you would be prepared for it. No matter how tough the opponent was, it was probably never as tough as the conditioning itself. In fact, the conditioning was so intense and so unique that we would have NCAA Division I head basketball coaches and assistant coaches come to watch the conditioning, not to recruit the prospective student athletes, but just to get a sense of what Coach Miller was doing in conditioning that they might be able to take back to their programs to instill a little bit of toughness, grit, mental strength into their own players, into their own program. I think this is a great analogy for financial planning. Our goal really as financial planners is to prepare you for what is to endure. All of the Armageddon scenarios that you are exposed to every day. All of the things that you hear from your friends, in the news, online, on social media, that is saying this time it's different. I just heard in the news, ... And that big, strong, powerful behavior barbarian is trying to get you to do something to destroy the written, documented financial plan. After all, the financial plan is what is dictating the portfolio. Your dreams determine the plan determines the portfolio. Your plan dictates how much money we need to have in cash, how much we need to have in fixed income, and how much we need to be investing for growth. We try our best to be like Coach Miller, to prepare you for what is to come. And we know in 2024, it is an election year. If 2020 is any indication of what we are in store for in 2024, it's hard to imagine what we're going to endure as a country over the coming year. In this video, I've included a chart from Dimensional Fund Advisors, DFA, that goes back to 1926, and it just shows the president that's in office and whether Republican or Democrat, and really what's happened over nearly the past 100 years. I know that people have really strong political opinions, and I think it's incredibly imperative to remember not to mix your political perspective and make investment decisions off of that. Because no matter who's in office, companies are going to do whatever they can to steward their capital towards profitable endeavors. After all, the people that are making these decisions at the highest level of these publicly traded companies are largely incentivized by their own company stock. They're going to do everything in their power to steward the capital, to try to do things that makes the stock price go higher. It's in their best interest. It's in the board of directors' best interest. It is a win-win. Speaking of wins, we want to help you win. And it's very important to remember that returns in the market are not just given. We believe that they are earned. And there is a cost of admission when investing. Number one, we believe history has shown that there is approximately a 15% drop every year within the US stock market. And approximately every 5 years, there is a 30% or greater drop in the stock market. And that's a hard stop right there. If you can't endure those two things, if you can't endure that conditioning, that gruesome pain of putting in the work, you're never going to experience the historical long-term return of the stock market. And speaking of the historical long-term return of the stock market, you've probably heard numbers of 7 to 10%. In fact, if you just look at the S&P 500 alone, now the S&P 500, it's an index that you can't invest directly in, but it's a great proxy for large, well-capitalized companies. The worst 30-year rolling period of time that the S&P has had is 7.8%. So if you pick the very worst month to invest and held that investment for 30 years, you would have averaged 7.8% annualized rate of return. What that means is that a $100,000 investment would have turned into close to $952,000. Now, we talked about historical 7 to 10% rates of return. If you put in $100,000 today, the odds that a year from now that your investment account would be worth $107,000 to $110,000 had you invested only in stocks, I would say is historically very rare. I want to share with you another chart, and this breaks down what has happened in the S&P 500 every single year between 1937 and 2022. In fact, the S&P 500 only returned between 7 and 10% one time since 1937, and that was in 1992. Maybe it happens in 2024, but I certainly wouldn't count on it. In fact, what I love about this chart is it shows you how lumpy the returns are, right? There have been more periods where the stock market has been up more than 20% per year than any other category. In closing, we don't make predictions about what's going to happen next. Even if we knew all of the economic data and how it would unfold perfectly next year in 2024, we still would have no idea how the underlying stock, bond, real estate, treasury markets would react. Our job, like Coach Miller, is to continually act upon a plan. Be prepared, do the conditioning. Watching this video, reading our weekly emails, that is part of how you condition your mind for the chaos, the Armageddon scenarios, everything that's going to be thrown at you. When every instinct in your body is telling you to do something extreme to get away from the plan, hold tight to the plan. Faith, patience, discipline. And if you have questions, feel free to reach out to us. We're glad to help remind you of how we built the plan in the first place, which is always dependent upon your dreams. The dreams determine the plan determines the portfolio. Hold tight to the plan. I wish you and your family a happy and prosperous 2024. If you found the video helpful, please share it with a friend. As always, we think the very best thing that we do, it's our Dollars and Diagrams email. We send it out every Saturday morning at 9 a.m. It shares some real-life financial planning insights, real-life case studies. It would mean a lot if you would consider subscribing. Thank you, and have a great day.